it seems, is no longer king these days.
No, and more Canadians are ditching their wallets for alternative ways to pay.
Yes, Ross, the new digital payment systems, though, are not without risk.
That is true, but I bet if I offered it, you wouldn't refuse it.
Not at all.
Never.
Apparently, more people are turning away from cash. Technology can be convenient, but you need to be careful. We might be embracing new methods of payment a bit too quickly, which could lead to increased debt and identity theft.
Tap and go, like Apple Pay. It's the way of the future. Rachel Hook walks around every day with almost no money in her wallet.
I don't use cash or checks, actually. I don't even have a checkbook or cash.
A survey by Moneris, Canada's leading card processor, shows that 67% of consumers aged 18 to 34 use digital technology to pay at the cash register. But it's not just them. The numbers are high for older folks, too, with 49% of seniors embracing it.
Canadians love their technology and they love innovation.
Paying for virtually everything with apps or digital payment systems like Apple, Google Wallet, and a whole lot more. But with that comes risk.
And it increases the opportunity for impulse spending.
Which is why Consolidated Credit Counseling Services of Canada says you need to closely monitor your purchases.
If you're going to pay this way, you might want to think about setting limits.
Because often the payments are linked to high-interest credit cards. Many companies offer their own branded apps too, like Starbucks, Walmart, Uber, and Tim Hortons. It builds loyalty and can offer rewards, but watch out.
Mobile payments can generate a mountain of digital data that can tell lots about us that we may not want people to know.
Also creating opportunities for hackers. So think about linking your payments to a credit card rather than a bank account. It offers greater protections from fraud.
These retailers are ending up in a situation where people are perhaps spending more, which is a great thing for them. However, it might be pushing people into debt.
And if you find yourself in that situation,
if it's gotten really out of hand, what you may want to do is just use cash.
Good advice. According to Moneris, the preferred method of payment by Canadians, credit cards top the list, followed by debit cards. 46% still are hanging on to cash. Contactless cards are like tap to pay, 31%, and retailer apps, about 5%, followed by the mobile wallets like Apple Pay.
I was just showing, I have my, my Visa on my phone, and the reason I like it is because it's better than tap to pay because I have to have my thumbprint or a fingerprint to be able to use it.
There is good security there, and also what's good about that is it emails you directly and shows you exactly when it's been used.
I got a record, exactly.
Yeah, so it's fairly secure, and that credit card information is not stored with Apple Pay.
Right.
It doesn't come up there.
Right.
But again, you got to pay attention to how you're using it. It's because it's really convenient.
It is. And what's next then?
Okay, well, one day you might not even be able, or you might not even need a phone. You might just use your fingerprint.
Ooh,
yeah,
that's dangerous.
biometrics are next. And there's also another thing that's in the works that will let you scan merchandise and pay for it without even walking up to the cash register. That's right, Sam's Club already has it, and Sam's Club, as you know, is part of Walmart, so could Walmart be next?